This video is brought to you by Answerly, a question platform that pays you for adding high-quality answers on different questions. The users are rewarded in Answerly tokens, which they can easily convert into dollars or any other cryptocurrency by using one of the exchanges mentioned in the description. There is one simple thumb rule to investing in assets, and it is learning to take volatility in your stride. Given the fickle nature of the investment world where the graph swings wildly, it takes a strong heart to ride the wave. Trading in Bitcoins is no exception. Hello and welcome to our YouTube channel. In today's video, we'll be talking about the scary Bitcoin crash, crypto bear market starting. Investors who jumped aboard the latest Bitcoin price rally have learned the hard way just how brutal investing in cryptocurrencies can be. Bitcoin flew to an all-time high of almost $65,000 in April, but crashed below $32,000 on May 23rd, losing half of its value from the peak. So far, so Bitcoin. The cryptocurrency has been incredibly volatile for a decade, with quick fire gains and losses all part of the fun. Yet all this will come as a shock for more recent investors who has not seen a crash in the past 12 months. Stefan Ouellet, chief executive and co-founder of Front Financial, called it the first welcome to crypto day and said newbies had better get used to it. The history of these assets has been littered with aggressive rallies and sickening sell-offs. With the price rebounding above $40,000, crypto fans will tell you to buckle up and enjoy the roller coaster. Yet, the recent wipeout wasn't just a random event. There were clear, identifiable reasons for it. Bitcoin and other cryptocurrencies now face two existential threats, and investors need to know what they are. But before we dive deeper on scary Bitcoin crash, like this video, smash the subscribe button, and click the notification bell right now because if you don't, your investment in cryptocurrency will drop down. You don't want that to happen, right? So stay calm and keep on watching. Shortly after Bitcoin's latest all-time high last week, Ethereum marked its own new all-time high last month when its price went over $4,400. Earlier this year, previous sudden drops followed a ban on cryptocurrency transactions and mining from China's central bank, which in September declared all cryptocurrencies illegal in the country. After previously topping $52,000 in early September, Bitcoin's price had dropped and struggled to get back over $50,000 until October. Even with its recent and usual ups and downs, Bitcoin has mostly been on the rise following a drop under $30,000 in July. Bitcoin first hit a high of more than $60,000 in April, and the ups and downs since then highlight the cryptocurrency's volatility in a time when more and more people are interested in getting in on the action. In the weeks between the most recent July low point and its high points in recent weeks, Bitcoin has risen steadily. Again, Bitcoin is very volatile, so these ups and downs are par for the course. Bitcoin's price dropped on Tuesday, November 16th, along with cryptocurrency prices across the board just days after the world's largest cryptocurrency reached a new record high of $69,000 in value on November 9th. After a year of gains and record highs, cryptocurrencies are enduring a turbulent time with unpredictable price changes. The crypto crash comes as China reinforced its clampdown on cryptocurrency mining and transactions in the country, which Chinese banks and regulatory authorities declared to be illegal in September. Bitcoin's price has fallen by almost 8%, with a further blow coming as U.S. Securities and Exchange Commission rejected global investment company VanEck's proposal for an exchange-traded fund or ETF underpinned by Bitcoin. Why did the crypto market crash? A number of factors have likely contributed to the crash. A major one is the U.S. Securities and Exchange Commission or SEC rejecting a spot Bitcoin exchange-traded fund or ETF, which would likely have seen billions poured into the crypto market. Bitcoin and other leading crypto coins experienced a significant drop in share price after investors began dumping mining equipment as China announced fresh regulations. China's National Development and Reform Commission said on Tuesday that it would consider punitive electricity prices from some crypto mines in the next stage of its crackdown. Twitter's CFO Ned Siegel also made negative comments about cryptocurrency, which may have helped sway the market. He said investing cash into crypto assets doesn't make sense right now. Matthew Dibb, COO and co-founder of Stack Funds, told CoinDesk that Bitcoin would continue to lose value. We've noticed some larger sales occur on Bitfinex as well as opening of new short positions, he said. While liquidations so far are quite low by historical standard and funding rates are approaching flat, we could see a further cool-off in BTC for the short term as momentum is beginning to stall. It follows recent crashes brought on by Tesla making a U-turn on accepting Bitcoin as payment for its products, and China clamping down on initial coin offerings, block changes, and warned against speculative trading. A further blow was dealt when China ordered Bitcoin mining in its Sichuan province to shut down completely, and furthermore told banks to stop supporting crypto transactions in a latest wave of restrictions on cryptos. Now, the country's central bank, People's Bank of China, has effectively banned digital coins after announcing all transactions of cryptocurrencies are illegal. The decision has already had an impact on the global crypto market. Will Bitcoin crash again? There is no way to predict the future. Some of the investors who predicted the 2008 housing crash say Bitcoin is a bubble that'll burst. The Bank of England's Deputy Governor for Financial Stability said Bitcoin's price falling to zero is a plausible scenario. Meanwhile, Fidelity's Director of Global Macro, Jurian Timmer, tweeted that Bitcoin's price could hit $100,000 by 2023. While there is no crystal ball for the crypto market, you can bet that an asset as speculative and volatile as Bitcoin has not seen the end of its price roller coasters. That doesn't mean to sell all your Bitcoin, but it's a reminder that crypto isn't for those who can't stomach both the epic price rises and the scary plummets. Financial advisors recommend allocating just a small part of your portfolio, no more than 5%, to risky assets like crypto, and to ignore the massive volatility and invest for the long term. What does this price drop mean for crypto investors? For those who invest in crypto for the long term using a buy and hold strategy, swings like this are to be expected. Big dips are nothing to be overly worried about, according to Humphrey Yang, the personal finance expert behind Humphrey Talks, who says he avoids checking his own investments during volatile market dips. As long as your carpet investments don't stand in the way of your other financial goals, and you've only put in what you're ultimately okay with losing, Yang recommends using the same strategy that works for all long-term investments: set it and forget it. If the type of extreme drop bothers you, you may have too much riding on your crypto investments. You should only invest what you're okay losing. But even if the drop is making you rethink your crypto allocations, the same advice still stands. Don't act rashly or append your strategy too quickly. Reconsider what you might be more comfortable with going forward, such as allocating less to crypto in the future or diversifying through crypto-related stocks and blockchain funds rather than directly buying crypto. A crypto bear market is one in which the value of major cryptocurrencies such as Bitcoin have fallen at least 20% from their recent highs and are continuing to fall. By contrast, a crypto bull market is one in which the major cryptocurrencies are on the rise. Investors don't have experience with the performance of cryptocurrency during a stock bear market. The last true sustained stock bear market occurred in 2007 to 2009. At the time, Bitcoin has just launched, gaining attention, if not yet acceptance. While calling a bull or bear market in stocks or in cryptocurrency requires technical analysis of values, there are several other that both markets have in common. What are the signs of a crypto bear market? One of the most famous maxims in all of investing is buy low, sell high. In 4 words, it's how investors make money. And it's why for crypto investors, knowing when a bear market is coming or when one is just about to end can make all the difference. This is where the relative youth of the crypto market makes things difficult. With the stock market, economists, analysts, and traders have decades and even centuries of data to sift through to find the trends and triggers that occur just before a bear market turned to a bull and vice versa. Whatever the cause, Bitcoin's unexpected swoon caught many off guard, with the momentous occasion of the first sovereign power to accept the digital currency as legal tender expected to give it added credibility, despite its obvious volatility. No one knows the future, so no one can say whether Bitcoin is going up or down in the near term. What can you say about the scary Bitcoin crash? Will that be happening again? Let us know your thoughts about this video in the comment section below. If you like this video, make sure to smash the like button and subscribe to this channel. To learn more about Answerly and Answerly tokens, check out the links in the description.